and also complementary perspectives. And so, I know a lot of people get really anxious when it comes to finance, whether that's like doing small development financing or just like, doing your own home finances. But and I'm one of those. But I think this is going to be way, way fun today. So I'm really excited to get going. And I have a friend who used to work in the Pentagon, and she once told me there was a tradition within the Pentagon, which is to give the bottom line up front. In other words, to start with a takeaway for the audience. And to be honest, I have no idea if this is true or not. It's just what she said. But we're gonna go with it. And so I want to start off by introducing the panelists, and I want them to each tell us your name, the company or the organization that you're representing, your role in small scale development, and then one key thing that you want, some segment of the small development ecosystem to know regarding financing. And this could be like a message for aspiring developers, established developers, property owners, banks, other finance institutions, anyone in the field. And so if you can each try to do that as panelists in 45 seconds or so, that would be awesome. And we're going to start in alphabetical order here. So, or at least alphabetical order by last name. So, Gene, we'll start with you.
Okay, I didn't expect that, but hello everyone. My name is Jin Liu. I am the presenting U.S. Bank, which is one of six in ranking among all the big lenders. So we are one of the very few big bank lenders that offer construction financing. We also offer lot loans. So before you build anything, you may want to look into buying a vacant lot, and that's where we can come in and provide the financing as well. I can go into details later on the requirements and what our appetite is on. But the takeaway is have the conversation early, especially on construction financing. Sometimes if you already started funding your project and then you come to us, that's already too late. So if you have the idea or have the plans approved by the city, and only occupy 1 to 2 units, we can typically be able to finance a certain percentage. I can go into details if we have a specific scenarios. So I guess the key takeaway is engage us early on in the process, so then we can be able to provide a solution.
All right. Thank you, Gene. We'll go to Josh next.
Okay, unmuted. Hi, I'm Josh. I'm the co-founder and CEO of Frolic Community. And we build cooperative housing, primarily working with single-family homeowners and um, uh, currently like in early phases with on a project with EPA Can Do, which I saw Dwayne on this call as well. Um, Mostly in Seattle in the Northwest, but our project with EPA Can Do and Bahali Land Trusts are first in California. And our projects are generally in the like 6 to 15 unit range. We have a lot of common space. Some of our projects have common houses where people eat meals together. And then we use cooperative finance to reduce down payments to allow people without generational wealth to enter into ownership. So all of our projects have down payments between $5,000 and $30,000. So I can share more about that later. I think the takeaway I want to share in terms of finance is uh, to there was a one of our advisors once that when we like got started and explained to him what we were doing, he said, you need to what you're doing is extremely complex, but like for each lender you work with or investor or partner, you're gonna have to create this like complex this three-dimensional object that when I look at it from this angle, it looks like the letter A, and when I look at it from this angle, it looks like the letter B, and I can like see my A and feel safe and comfortable. And this other lender can see their C and feel comfortable, and the city can see their letter, but actually it's a very complex shape. And I think just to really understand the actual needs of particularly lenders and like what how projects appraise, and how important appraisals are to development, um, as the funnel that all things need to go through. So I'll stop with that.
All
Thanks.
right. Thanks, Josh. Carlos.
Hi, everyone. My name is Carlos Plazola. My company is BuildZig. I'm the CEO. I'm also the founder of the Oakland Builders Alliance. I have been building development projects, my own projects, since 2011. I started with a little tiny house that I did a remodel on, and about 7 years later, we were building mid-rises throughout Oakland. I see myself here in this role as wanting to serve the traditionally marginalized communities and people seeking to become developers from within those communities. And to that end, my suggestion, advice is find a coach. For nonprofits in the room, help find and subsidize coaches. And for those wanting to become developers, find a coach, be willing to pay what you can afford to get a good coach to lead you both through the financing and development vision, but also through some potential life changes that you may need to make to become a sound business person.
All right. Thank you, Carlos. And so we'll go to Sibley.
Hey, so I'm Sibley Simon, and I'm representing two organizations. One is New Way Homes, which is a nonprofit that runs an impact investment fund specifically for creating more affordable housing that's less publicly subsidized. So, because all the public subsidy for construction gets used, we try everywhere we can to find ways to create affordable housing, either without using it at all or using much less of it. That's that New Way Homes mission, but we are really a part of the financing picture for projects that we work on because we've gone to non-traditional funding sources, impact investors, and foundations, et cetera, and gotten loans from them to fund pre-development, and often work with churches or other nonprofits that own land and partner that way. And then we have a company called Workbench that does development, does design, the architectural design, and sometimes construction services, just to try to make it all much more efficient so that our projects can be more affordable.
All right.
As far as a message, completely agree with the last couple things said. I've had mentors and been a mentor, and also the three-dimensional object. But so my twist on that is going to be to be a developer in general, you have to be an incredible optimist. And then try to always act with realism. But in my perpetual optimism, I am still looking for an institutional lender that I feel like is in the 21st century in terms of efficient customer service, consistent product, just really easy to work with. And I believe it's going to happen. But for the time being, just like I'm still looking for a city that has a sensible process to get permitting that doesn't go round and round and have to try to enforce state law on cities to get things permitted. But in the meantime, the three-dimensional object point stands that these are incredible bureaucracies and very difficult. And so you do have to start way in advance and try a lot of things and be very patient and do custom things every time. So it's unfortunately my point is that it's a mess.
All right. Elizabeth, bring us back into something truly optimistic away from the mess.
Do my best. So yeah, I'm Elizabeth. I'm the executive director of the LISC Bay Area office. We are a community development finance institutions. We're an intermediary. We do lending, we do nonprofit lending, and we also play a pretty large role in doing capacity building for different parts of the community development ecosystem. So yeah, our role in touching small scale development is on the lending side, especially around affordable housing, sometimes community facilities. And then we also have a capacity building program that's meant for faith-based organizations doing development and we've done some technical assistance with those groups. Um, Somebody is off mute and is talking to somebody
Yeah.
else. So if you could mute yourself.
Yeah. Oh,
be
there we go.
helpful. Thank you. All right. Um, and I think my kind of key thing to know is, at least from the nonprofit lending side, 99% of the time, the person that you're talking to about seeking financing, they're going to need to take this kind of loan concept and go to an internal source to get approval. So you really want to think about how you're equipping them with everything that they'll need to know in order to make the case. And this is, I think, pretty obvious, but what we offer is debt that has to get paid back. And so, one of the big questions is always going to be like, how is this loan going to get repaid? So, having kind of a concept of that when you go into a conversation is really useful and helps to kind of create trust and a relationship that you can then build on as you move forward.
So we are, thank you, Elizabeth. Thanks to all of you. And we're going to hear from all five of these people in, more detail as we go forward here. But it would not be a Build It Green event if we didn't have you all as an audience, be engaged. We tend not to let people go on autopilot. So we're going to ask you to do some engagement right now. And we're going to do a brief poll. So we've got, three questions for you that we're going to do right now. The other thing I'll say is we are also, I'm sure, not going to get to all the questions that you all have for our panelists today. So we're going to drop a slide into the chat that has email addresses for all of them on there. So you can get in touch with them, kind of offline and, start to build relationships. So we'll drop that in the chat if we haven't already done so. And then Odin, let's go to our first question. Here we go. So first question is what best describes your role in the small scale development ecosystem? So you can see, property owners, established developers, aspiring developers, financier, you play another role or something else. And on the something else, feel free to, drop what you do in the chat. As I see this coming up, we have a lot of people who I think are interested in the aspiring developers and here to hear from the handful of people who are providing the financing. So that's cool and interesting. A good number
We'll
of
give it
properties.
about another 10 seconds or so, and then I'll share the results out with folks.
Okay. So yeah, so the biggest, more than a third of you here, and we've got well over 100 people here, are actual aspiring small scale developers. So we'll keep that in mind as we go forward. Let's go to the next question, Odin. So now we're curious, we know who you are. So now we want to know a little bit about what brings you here. What is really driving you, and ask that might be all three of these things are up here, are actual drivers, but pick the one that's most important to you. And I don't know if everybody else can see. I don't think you can all see the results yet, but we have a huge leaning toward you're trying to do something meaningful in the world, for people, for your community, for the environment. Current number up here after 79 people have already answered this. 77% are leaning, leaning toward meaning, as Odin just said in chat. I kind of expected that number to be high, but I didn't expect it to be this high.
This is about like a little more response than the last poll. This is 79% of folks.
All right, let's go to the final question. So this one is, what do you want to know? So, and I, kind of scroll up and down on this. We've got a good number of questions here. And again, pick the one that's most important to you in terms of what you're trying to learn here today or trying to learn going forward. Apparently, we picked a good set of like sample questions to throw in here because the range is between right now about 15 and 25%. They're all getting their fair share of votes. It looks like right now the leader is how to find financing that aligns with your social, community, and environmental goals, which is great. Followed, actually, no, tied now with the what are the biggest mistakes developers can make. So, what do we aspire to, and what should we avoid doing? Seem to be the ones that are jumping out. All right, very cool. So, Odin, let's turn off the poll. That was fantastic to get a sense of, of who's here. And I think we want to move on to getting back to having our conversation with our panel. So I want to start with a couple of questions that are aimed at our development focused folks, and we're going to start Carlos, with you, you're up on the screen for me right there. And curious, like, isn't this is kind of building off of our focus on the community, environmental, focus on people, and you mentioned it a bit in your opening remark. But what is it that really drives you here? And why are you, this is a hard sector to be in. So what is it? What brings you to this? Love for you to give us a minute or so on that elaboration on, kind of what you said earlier, and then we'll go to you, Sibley.
Yeah, thanks, Jeremy. I think the overarching thing that drives my life, the one word I'd have to pick, is liberation. Liberation of all people. And so, what this means for me, as it pertains to traditionally marginalized communities, particularly of America, is how you offer opportunities to people in these communities to become their own developers, their own property owners, their own business people, to participate in this whole economic engine in the United States. And along those lines, I've learned a lot of lessons in being a developer, from going from a very small developer to medium size, and a lot of really important lessons about lifestyle choices, and how to successfully think from a place of abundance, which is a much better place to think from in terms of being a developer than a place of scarcity. So when you think about people coming out of poverty, there's a tendency to think in terms of scarcity, which oftentimes can get you in trouble in business, but you don't learn these things. There's no coaches out there teaching you these unless you sort of teach yourself. So this is an important piece that I'm hoping we can talk more about, not just here in this meeting, but in general in the world. How to not just get the financing and develop the plans, but also to think in ways that enable one to become a successful developer.
All right. Fantastic, Carlos. Sibley, what about you? What brings you into this crazy world that is small scale development?
Yeah, it's just that I feel it's the thing I can contribute to one of the biggest problems that we face, which is our housing crisis, our lack of housing supply, our housing affordability crisis, the lack of racial equity in housing. Just, I started helping locally here on improving the system of helping get people out of homelessness, and then just became clear that there's just not even enough housing to make progress more substantially on that. And just I live in the highest rental cost area in the country now, because it stopped building housing decades ago. But there's so many places across the United States where more and more people can't afford housing. It's to me, it's a crisis, and it's an environmental crisis, because people are driving further. It's healthcare crisis. It's so many things, a homelessness crisis. So I just want to help solve it. And there's a huge component to solving it is having a way bigger industry of small scale development. And we, through zoning in particular, gave a lot of that industry up in a lot of parts of the United States decades ago, or at least in very recent decades. And we've got to bring that back.
Fantastic. So, now that we've got the sense of what motivates the two of you, I'd be curious, and Sibley, we'll start with you this time. Uh, Tell us about, and it could be either something that's happened in the past or currently going on or in the future. So, dream project or mo project you're most proud of. And yeah, tell us a little bit about it and why.
Yeah, a great example. We do sometimes acquire sites or do different things, but one of the big things we learned was a huge opportunities partnering with small churches that just are one site, because they often have a parking lot or a site, and they're mission driven as well. So the church in Oakland, in East Oakland, that uh, really cared about the displacement in their community and special populations, and just trying to help more people. And it was a case where we could work with them. We developed 12 units on their property. And this is a perfect example of affordable housing without public subsidy to build it. We just created housing units. And 12 units. From a permitting point of view, they weren't income restricted, but they're on the church lands. They're going to be charitable use. And we got in the best lender I have worked with is this church specific lender, but very efficient. And then by the time we got them built, the county came in. That is public funding for operations. And so it's 12 units used as reentry housing for folks coming back into society who are ready and motivated for jobs and services, and highly successful at helping people get sustainable path in their life for 20 adults at any given time. And so I just think, we were able to go a lot faster because it was privately financed, and it was a great partnership of a bunch of parties.
Fantastic. That's a great story. Carlos, give us something you're proud of, or will be proud of in the future.
Yeah, I'll do both quickly. There's a series of projects that I did in the late teens that were historic preservation projects. The intention here in Oakland, one was a 14 unit conversion of a mansion, beautiful mansion that was slated for demolition into 14 apartment units. Hugely successful financially, but what I tried to show there was that we can save these beautiful old buildings that have been part of the community since early 1900s and convert them into active, useful, financially successful buildings. Another one was an 1882 Victorian that was slated for demolition in Jack London Square. We saved that. We turned it into really beautiful apartment units and a restaurant. And then an old church that was slated for demolition, built in 1906, that we turned into family-sized housing in the Bushrod area of Oakland. What I hope to do in the future is take a project that I have on Telegraph that's right now struggling with finding tenants and turn it into co-living as well as small suite, it's kind of a small unit development project, sort of one new and then one repurposing of an existing commercial building. But right now the financing is tough.
Yeah. Well, that leads perfectly into the next question. So, the main point here is to talk about financing for this event. So, talk to us about, and Sibyl, you started to do this with yours a bit, but how did you make the financing on the successful ones? The historic preservation ones, for example, Carlos. How did you make the financing work? Um, or conversely, what are you were mentioning the headaches, what is it that's really getting in the way right now, in terms of like making that other dream project happen? So we'll start with you, Carlos, and then Sibley, we'll come back to you.
Yeah, well, the ones I did in late teens were in a completely different economic atmosphere. We'll start with that. It's a whole new reality now. The interest rates right now are really challenging to build anything. Construction costs are higher than they were back then, but not by a lot. So it's actually not construction costs that's constraining us right now. It's interest rates, but it's also here in Oakland impact fees, for example, a series of fees that are placed onto new projects, both from the utility companies, from the city, new state requirements, all of these layered onto the high interest rates. When we can, if we can get down below a 4% 10-year yield, maybe then we'll start looking at running numbers again. But until then, I think it's just really hard. Every time we run models, we're just so far away from having it buildable. Not to mention that uh, it's tough to make the rents pencil right now relative to all costs.
All right, Sibley, how about you?
Yeah, trying to be creative everywhere we can. And, I mentioned one lender that was specific to church lending, but one of the great things about that was a single product where we got our own funding got a project entitled, but then the more expensive phase of pre-development, given that we didn't have to acquire the site, is the building permit phase. And so this one loan came in and funded the building permit phase with a lot of those fees and all the engineering and design, then was the construction loan, and then was permanent financing. And so just the same product, converted through those steps, that reduces fees, way simpler. And one of the things with these small projects, you're just squeaking through trying to make them buildable, as was just said. And you tend to have a small team. You don't have the overhead of doing a whole complicated financing, structures or all these applications or all these fees or points on everything. And so, having one product like that with a great lender was really great. Where we've often otherwise gotten loans have been because of trying to do things with special population or affordable housing, from community foundations. We've gotten loans from healthcare organizations, and then a lot of individuals will come in either with equity investment or loans, and been able to raise a lot of impact investment. Our largest project under construction, we raised $10 million of all from not from sources that typically that's not including the debt or other from, but just in equity, either philanthropy or equity investment that all from sources that don't typically do housing. So it's, I'm looking at the same problems that Carlos is, and then trying to go to sources and saying, look how great for the community this project is, or how it'll give solid returns in the long term, just not short term, and then find outside the normal structures, because we really haven't gotten financing yet from a bank or a CDFI, I would say, for any of our projects. So.
All right. So thank you, Carlos and Sibley. We're going to come back to you. Actually, one last question really quick to you, Sibley. There's great stuff going on in chat, including a question, and we're going to do Q&A later, but you had mentioned specifically a lender that specializes in church projects. So can you throw the name out on that? Cool. He's going to put that in chat. And I also love the fact that people are like, asking questions and people are like, text me. I know, which is very cool. So let's go on to our other folks who I think, bring both that institutional financing background and I think in Josh's case, kind of straddles the line between really thinking about the financing side and thinking about how do we get things built. So I want for the three of you just to kind of start off with the same question I've asked both the full group and Sibley and Carlos. And maybe if you can do this in like 30 seconds, why are you in this? What's the motivation for being in this sector and like thinking about money every day? And maybe we'll start with Elizabeth.
Perfect. I come to this work because I really wanted to see community priorities go from vision to actually being in the real world, actually existing on the ground. I did a lot of policy work or supported policy work in my previous role and saw that people fought really hard battles to have strong policies that would lead to change in the built environment. But then there were still roadblocks to getting there. And so I was like, okay, maybe a CDFI is a place where I could figure out how to help those visions get to the next step.
Fantastic. Thank you, Elizabeth. Jean, how about you? What got you into this?
Sorry, took me a while to unmute. I started as a residential, still is a residential mortgage originator since 2002. My passion is to help people realize their home ownership dream. So I have assisted so many different first generation homeowners or just that more in the residential. In the beginning of the first decades or so of my career, it's just helping people build wealth through home ownership. And slowly then, not every bank offers construction financing. And then once I migrated over to US Bank, and that's one of the products they have. So I started also included that as part of the offering to some of my clients that may have want to move up or expand their homes. And that's how I got into this space in helping people to build smaller scale projects, but mostly owner occupied it or owner take on projects that using developers, licensed contractors.
Fantastic. Thank you, Gene. And Josh, I'm gonna ask you to answer that question, but also like tee up the next question here. So, yeah, tell us a little bit about what motivates you. But I would also love to, as the one who I think is kind of bridging both like the developer and the, thinking deeply about, innovative financing. Tell us a little bit more about, about Frolic, and then tell us about, a project that you're really proud of, and or that you dream about in the future. So, yeah, if you can handle both of those, that would be great.
Sure, thanks. Yeah, I also just wanted to mention it's always an honor to be in these like spaces and among so many people that are all aspiring to be developers or working in this field to do what seems like very good work, and it's so deeply needed. So thanks everyone on the call and fellow panelists. Um, I think that when I was thinking about my why, it kind of touched on your other question pretty closely, but I think um, one of them is like on the individual level, what it feels like, what home feels like for people. And for, it's home is such a complex thing, but in something I care really deeply about is just the feeling of stability and security, knowing that you can plan for your future and that you're safe. And ownership and wealth generation, but also just like that stability has meant a lot. Um, and then I think for our projects, we uh, you can look at some of our projects online if you're curious, but we orient everything around sort of shared courtyards and then common houses. And so the project that I'm really proud of that we did with our partners, Allied Architects, recently is 10 homes with a shared common house where all the residents are doing meals twice a week together. They're living in smaller units than a lot of them have downsized, but they have this 1,500 square foot of shared space that's almost like a shared living room that they use every day. There's three single moms in the project, and there's just this like, I was there last night with residents during our community meeting, and it's just like this warmth and like vibrancy and like depth of relationship between the people. And that to me is like a whole different layer of home and what it feels like to feel like that the kids, play all together. They sit on the laps of other adults in the community. And there's just this, none of them have ever lived this way or thought of it. Like they came into it through as an affordable homeownership opportunity, but they've really taken to the community aspects of the project. And that's becoming more and more of a large focus of our work. So that to me, that feeling of home is a big driver. And then I think just like on a structural level, we're seeing it, we started in Seattle where there was a huge upzoning of single family land. And I know that's happening in the Bay Area and in a lot of California through state policy. But that process of change can feel so many different ways. And this idea of rooting development in existing communities and inviting in people who have historically faced displacement into that process of, like accessing the new value that's created in a rezone. Um, and that, a lot of what we do is partner with landowners, which I know I was looking at your work, Sibley. It sounds like you do that a lot as well, and some of the others on this panel. But that source of capital totally changes what gets built. If people are a big investor, equity investor in a project, and they want more community or they want a different product, then you can do other things than using traditional capital. So I think just like the potential for development to actualize people's dreams and communities' dreams, I think that's like a big driver for me.
Fantastic. Thank you, Josh, for like getting us into, and I love the story about the place where you got the kids sitting on the laps of everybody. Everybody is like a nurturer in that case. Elizabeth, we'll start with you, Elizabeth, since I'm looking at you straight on the screen. But yeah, again, tell us, kind of mixing a couple questions here, but tell us a little bit more about Lisk. You started that in your original answers, but also, a project or a program that you all are that you're really proud of, and might be of value to folks on the call.
Yeah, sure. So yeah, I mentioned LISC, we're a CDFI, we're a nonprofit lender. We were created around the same time that the community development movement was really kind of coming out of the civil rights movement. And we and a couple of other institutions like us, the idea of CDFIs was really to kind of step in and do lending to community-based organizations and parts of cities, parts of the country where kind of traditional lending wasn't going. So in theory, we're meant to be kind of a little bit more risk taking. We often do in the Bay Area a lot more pre-development and acquisition lending because of that. And I'll say the reality is like we're a 40-plus-year-old organization. And so over time, our bureaucracy has grown, our appetite for risk has changed as markets change and we've had losses and things like that. So it's kind of an interesting institution to be a part of, especially when we're having this conversation around like what kind of innovative financing is really needed to meet non-traditional products. A lot of the lending that we do is for a more traditional kind of affordable housing project around 100 units. It's probably going to try to get tax credits as a major takeout source. So one of the things I'm really proud of that we've been able to do has been through a partnership called the Partnership for the Bay's Future. We've been administering a family of loan funds, not just one, but a whole family. And some of the kind of smaller scale and I think more innovative work that we've been able to do through that has been to support preservation deals, acquisition rehab deals. A couple of folks mentioned examples like that, where you're acquiring a building, stabilizing the residents and the tenants. And then in our case, supporting organizations that are pulling those buildings into more long-term or permanent affordability, like a community land trust would. So that's been really cool. And we've been able to do that because we had special capital that we were able to blend with our kind of more traditional capital that we have at LISC through PRI, philanthropic debt investors, through some equity money that we were able to blend that could tolerate a little bit more of the risk and doing things that were more outside of the box. One thing that's always really important for me in talking about preservation work in particular is that like some of the reporting that we got early on from people who self-reported was that of those deals that we did, about 95% of the people living in these buildings who now have an affordable home in the long term are people of color. So it's also a very important anti-displacement strategy. So like being able to blend the like technical capital side with this really important policy goal that our region has been struggling with for many years is something that I'm really proud LISC has been able to do.
All right, fantastic. Thank you, Elizabeth. And Gene, let's wrap up on this question with you. And again, a chance to tell us a little bit more about US Bank. And I think interesting in your case, some of the things you can do, but also the things you can't do. And then also, yeah, feel free to throw in that question around or answer that question around what are you proud of?
Well, so we are really limited on what we can offer. We do have another division that works with large scale developers, right? They will not touch anything less than $5 million, and they could do medium-sized developers, and that's not in my area of specialty or expertise. I am involved with or the U.S. Bank residential mortgages are typically involved with construction loans for a single unit or potentially a 2-unit, like someone who has a existing home with a big lot. They want to expand on it or build an ADU on it. We can work with that and finance the financing. We're pretty traditional. So that's pretty much in terms of interest rate wise, we in the mid sixes for construction loan. It's a one time it's a one time closing. So once the construction completed, they don't need to take out another loan to pay off the construction financing. So we work in that space to help people, especially a lot of homeowners who have extremely low interest rate. During the pandemic, a lot of people already refinance. They don't want to get rid of their first mortgage, but they have lots of equities on the existing property. We can also work with them to get a lot of credit, and then they can potentially finance the ADU project with a lot of credit. So those are the areas that we can come in and help. So some of those other projects, other panelists have described, it's not in our appetite. So we mainly focus on the residential single to 2 units most financings.
Fantastic. Thank you, Gene. And so I want to wrap up with the three of you, and then everybody else on the call, get ready because we're going to ask you to do some work again here in a second. But uh, the way we've entitled this is some of the do's and don'ts. And so, Gene, you just did a good job there of starting off of like, what is US Bank able to do for kind of this crowd, and what are you not able to do? And so I'm curious if each of you could give like a 45-second, like, here's like some real tips for the aspiring small scale developers we have here in terms of like, what to do when it comes to financing, and then what are some things to like not waste your time on and not do. And Gene, maybe if you want to elaborate at all of what you were just saying there, and then we can go to Josh and Elizabeth.
Yeah, for the people that fit our grid or boxes, checkout boxes, we usually tend to want to engage with them early on. We can even help them with selecting the developer if they're not a licensed contractor. Right? We will not finance on the project that are being built by unlicensed contractor. Right. So we also vet the contractors for them, for the homeowners, is to make sure whoever that they're hiring, it's going to be able to do it within, we offer different draw periods. When we approve your loan, we have 12-month draw period, 15 months, and up to 24 months. And depending on the contract you sign with the developer, we wanted to make sure this developer is going to be able to deliver and complete the project at the end of the draw period, right? So engage us early on. Once you have your permits approved or have your plans approved, that's probably the time to talk to us. So that we could, move forward. And sometimes if you come to us way too early and you don't even have the permits or the plans, then, I could give you a rate quote, but it will not stick because over time, interest rate change on a daily basis now, right? But we still being very competitive and offering pretty much like a quarter higher than someone who were to purchase the existing home on a construction loan. So this is very attractive.
All right. Thanks, Gene. So Elizabeth, rapid fire, like do's and don'ts.
Give you one of each. I think my do is do consider lenders to be your ally. Like I was saying earlier, like, they're often, and like you heard from all of us, right? Like there's a lot of mission driven energy in this space. And like, as Jean was saying, like lenders may have kind of other, like either formal or informal kind of technical assistance to offer as you're thinking about your project. But also you want to think about your ally as someone that you're trying to build trust with. So like share everything that you can about the project that you're thinking about, including some of the pieces that are a little bit scary because you don't want to have some of that information come out later. And then my don't, which may be a little controversial on this call, so welcome to pushback. I don't think smaller scale is necessarily easier than bigger scale. To operate a smaller scale building is actually much more challenging, especially if we're talking about like under 5 units, because the cash flow can be really difficult when you get into vacancies. And from an underwriting perspective, at least at our institution, it's exactly the same amount of work to underwrite a loan for a small project as it is for a big project. In a better world, a world that we may move to, perhaps there's different kind of options for smaller projects that just have smaller loans than larger ones. But something to know, is that the risks are going to be different for big and large, but they're not necessarily easier.
Fantastic. Thanks, Elizabeth. And I do appreciate that dose of reality. I think that's one of the things we want to keep here. So Josh, bring us home. And again, as somebody who kind of straddles thinking about financing and thinking about the development side, what are the, again, couple do's and don'ts for the aspiring developer crowd here?
Um, I oh, there's a lot of things. Um, I think one of our biggest learnings, I think, is how critical it is. Also, okay, there's two. One that's maybe hard to share with, and this is not against. I think Lisk is a CDFI, and you operate very differently. And Gene, I'm sure US Bank is an exception to this, but we've worked with lenders in the past who are like so gung ho on doing something good, especially their community lending departments, but don't actually have the decision-making authority to approve loans. And so they can actually like we've had some hard experiences with banks that have really like trailed us along for a long time, only to have a project die in loan committee. So understanding where the decision authority lies within a financial institution, CDFIs tend to be much smaller and more nimble and able to have like more concentrated decision making power. But if you have to get through a loan committee of a larger institutional bank, it can be very hard, even if there's individuals that are very supportive. So that's just like a to be aware of the internal politics of a lending institution and what it actually takes to get a loan passed, I think is good to be mindful of. Um, and connected to that, I think is just the I think an example is like when we built our first project, we shared with everyone like we're building a co-op, it's affordable home ownership, it's doing all these cool things that are very different, and lenders were very interested in that, but it appraises terribly. Like anything that's at all unconventional will suffer in its appraisal because there's not good comps. And so our approach now, I mean, we've begun to build more comps, but we also really like design our projects so that they comp well during for the purposes of a construction loan. So an example is like one of our next projects is appraises as 4 townhomes, each with an ADU in the ground unit, and it will become 7 homes with a common house. But the construction lender is just looking at it as for standard townhomes that sell well in the market. And so like thinking about those lenses of what a construction lender cares about and what you want to do that might happen after construction, it's just like good to be aware of comps and appraisals as you think about getting lending because as gung ho as a lender might be, if the appraisal comes in low, it puts them in a very difficult place. So that's that. And then I guess just like in terms of the things we do, we've like spent the last 6 years building out the financial products and system to finance co-ops and to do co-ops as like a homeownership tool. And we're doing our own projects, but in the future we hope to like work with more partners and help others to use that same ownership structure and the relationships we've built with institutional lenders like National Co-op Bank. So like if that's of an interest to anyone in the group of doing co-ops in the future, let us know.
Fantastic. Thanks, Josh. So we're now going to do a quick thing with the full group. So I want to ask, everybody to, pull out a piece of paper and a pen if that's your way of doing things. If you are somebody who wants to, type away at your computer or type away on your phone, maybe you don't want to take notes at all. But I want to ask you to do three things. First is to think about your dream project. So what is it that, maybe you've already built it, maybe you're going to build it in the future, but think about your dream project. Second is think about what it's going to take from a financing perspective to make that happen, and or what are the barriers getting in the way. We've heard a lot of discussion of both of those. And then third, based on that and based on what we've been kind of talking about here, what are your questions? Whether it's to the panelists or to each other. And I see like a whole bunch of stuff already showing up in chat, but just like, I want to give you just a minute here to ponder that. So we'll take like just a 60-second, not break, but 60-second quiet time to think that through. Go. All right. So I think that was maybe closer to 45 seconds, but just wanted to, again, give people a chance to. I think the question asking juices are already flowing, but just get that going a little bit further. So we're going to wrap up with the panelists right now. And I want to ask each of you to do just 1 minute on the following questions, and then we'll transition into Q&A. So, we've all been talking a lot about financing here. So what's one change you'd like to ask, a group of players in the field to make in terms of financing? What would be the effect of that change? And how would it enable small scale development to flourish? And again, that could be a change within, kind of your little corner of this ecosystem. That could be for somebody else. So just like a minute on that. And I'm just gonna randomly pick people to start here. So Sibley, let's start with you.
One I'm working on right now is finding lenders who will lend on projects without parking. When they're in really great transit-rich areas, walkable neighborhoods. We might even be doing a shared vehicle. We got bike infrastructure, all kinds of stuff. But there's a lot, especially you getting into more medium scale. There's a lot of both in investment side, equity sources, and debt sources that are like, nah, here's our minimum parking ratio.
All right. Thank you, Sibley. I'm just going to go down the order that I'm seeing you all on my screen. So, Josh.
The question was what's one change you would want to see within the world of financing?
Yeah, yeah. That you would ask somebody in this ecosystem to make one change.
I don't know if this is like a change as much as hope. And I'm curious, I want to get your thoughts on this, Sibley, based on the equity investments you've raised. But I think that making the case for non-conventional real estate investors to invest in projects that are below market or affordable as like a lower risk investment that traditional real estate investments look for 15 to 20% returns, and I believe there should be a big market for like that 10% return rate for people who have money they want to put into their community and get a return on it, but they're lower risk because projects are serving a lower market that's underserved. And like how to tell that story, maybe pool funds or build funds around it. But like I think that's something that I'm really interested in this moment.
Let's talk about it. The housing crisis is not going to be solved until that happens. I believe it's like mathematically provable. So let's talk more.
There you go.
Well,
Making connections as we go here. Gene, one change that you look for.
Well, I think from my perspective, because I work differently than the rest of the panelists, I'll just, make the process more streamlined, right? And I'm reading some of the comments like on the incomes. We actually could go to 50% debt to income ratio, right? And if you're building a 2-unit, we could potentially use the market rent on the second unit. If you're occupying one of the unit as your only occupied, then the second unit we can do a rent survey to allow the use of the rental income base, at least 75% of that. So those are the things that we've been, asking our underwriting to consider. We have made some changes, like giving out the drawers, and we have put the escrow process internal instead of hiring a third party company to do the draw validation. So, again, at US Bank, it's a institutional lender, so we're not as rigid as some of the other banks or institutions, but we are constantly listening to what other people or the clients' feedbacks, and we will just bubble up to upper management, and that's pretty much I have.
All right. Thank you, Gene. We'll wrap up with Elizabeth and then Carlos with your, again, in 45 second or so, like What would you ask somebody to change?
Um, I feel like my easy one is I would ask investors of all kinds to really rethink how they think about risk. Like, I think especially given what everyone's, naming about the affordable housing crisis and the need for more innovation, if, lenders aren't able to take any losses, we're not really going to be doing the kind of innovative work that we need to do in order to solve the problem that we're all in. So that's one. And if I can sneak another one in, I would say I think we need a framework that thinks about large scale, medium scale, and small scale development as all being part of the same solution. We've been able to do that across thinking about affordable housing production, preservation, and protection. And my fear is if we don't kind of have a more cohesive framework that includes small and large, it's pretty easy for the small stuff to look niche and to get cut off. And so how do we kind of have um, something that really includes all of these as pieces that we need to get to the goals that we're trying to achieve?
Yeah, it's a full ecosystem. Carlos, wrap us up.
All right, I'll be quick, but I'll do three. One, to view, well, I really appreciate large scale affordable housing development projects. I think that cities, especially here in Oakland, we can do a better job at looking at projects through the lens of neighborhood stabilization. The second thing is what Josh mentioned, having banks and appraisers look at non-conventional projects a little bit more creatively. And then the third one is also here in my hometown is having our city officials dig into pro formas a little bit more deeply and try to really understand what developers are experiencing, which would help all of us sort of work together towards creating projects, particularly towards neighborhood stabilization and creative projects.
All right. Thank you, all five of you. A lot of perspectives here, a lot of, great questions, a lot of, I think aspiration, but also like reality. So thank you all for taking the time to do this. And again, I suspect you'll get a whole bunch of questions right now, and then also later from everybody else. So with that, I'm going to turn things over to Odin and Sam to lead our Q&A part.
Hi, everybody. I'm Odin on the team at Big, and this has been an incredible conversation so far. So I just want to appreciate all of our speakers, and we've been tracking some of the questions in the chat, and some speakers, particularly Sibley, you've been doing an amazing job paying attention to speaking and then also responding in the chat, so we can continue that trend with any speakers. And also, so many of you have great expertise, so want to encourage you to keep answering people's questions, and the chat will be shared in addition to the recording because it's super rich in terms of questions, answers, and resources. What I'm going to do now is just draw from a few questions and see if we can, get this going. And anybody could take this, but one of the first questions that was asked was around looking at a good financial path if there are properties in inner city areas that instead of vacant, they're occupied by SROs or rent control that we want to purchase and renovate. So just wondering what the options might be there for not starting with a vacant lot necessarily, but looking at purchasing and renovating spaces with existing structures. Any thoughts there from folks?
Tough one. I'll speak to that. It's a tough question. Context is so important. One of the
Yeah.
challenges here in Oakland that we've had is a lot of our SROs, and one of the reasons we've had a jump in homelessness is because a lot of the SROs were purchased and converted to co-living during the 2010s. And so we lost a lot of that really important stock of housing. So I guess, I'd be concerned about the impacts of that to the larger community.
Mm-hmm. Yeah. Thanks, Carlos.
Yeah. Oh, go ahead.
Yeah. Go ahead, Elizabeth, please.
I was just going to add, yeah, I think the preservation strategy I spoke to earlier is one that some organizations are looking to try to purchase these older buildings and get public money to reinvest in them, do rehab as needed. A lot of them need a ton of rehab to try to keep it affordable. Um, and for sure, like in a lot of cities, there are meant to be at least some policy protections to try to prevent some of that conversion, though I think, Carlos, to your point, a lot of it has been lost already.
Yeah,
I can
great.
briefly that we worked with a rental building in DC, and then we're working with two in Seattle that are doing conversions or are interested in converting to a co-op to own the building. And then just like from our perspective, yeah, I think it's a different path than what you're talking about acquiring and then flipping it or renovating it. But it's really tough with like we need a really organized tenant community in order to consider a project because it's a lot of work and a lot to go through, especially if they're using the first right of refusal, like TOPA policy in that state. But we see a lot of potential in that in the future. It's just requires like an organized group of people that want to buy their building.
Great. Thank you. Sam, you want to take the next question?
Yeah, sure. Um, the next question, or one of the first ones we saw pop up in the chat, was also does it make sense to use S13 affordable housing info underlay in Oakland for a small 2-unit development? And I believe S13 has to do with like bonus height allowance, if anyone's familiar with that. If not, I might be off base and we can move on to a different question. And that's 3, 2, 1. Next question. I will move on. I'm gonna have to use the countdown. Oh, this is a great question, and I think we've been touching on this in ways throughout the call, is for a first-time developer, who would be like the best lender or maybe most approachable lender? I guess that does really depend on the scale of your project, but I'm curious to see how everyone would answer this.
I would say, yeah, with scale of project so important. I'm assuming if it's a first time early developer,
Mhm.
guessing it's probably going to be a smaller project until they build enough credibility and reputation. In which case, my early days were with private money lenders, and there are some good private money lenders who have scruples. So I think finding those that are interested in your product.
Yeah, I think that really ties into a question that I've personally had or seen people have throughout this learning series is about like how to build those deep relationships, whether it's with the lender or the construction team or developer team. Yeah, definitely something to explore. If anyone else has anything to add to that, we can also go to the next question.
I can just add in the affordable housing world, something that newer organizations often consider is doing a joint venture with
Mm.
a larger, more experienced organization.
Hmm.
It can be a more complex deal because of that, but it can both provide the kind of experience, like credibility that you need, and some balance sheet to the project that can be really useful for lenders.
Mm. Yeah, I'd be curious to learn more about like examples of that. That sounds really compelling. Odin, you are muted.
Yeah, sorry. There's a question that popped up in the chat that had a lot of discussion in the chat, but I'm curious if folks have responses here. Was there were questions about kind of financing prefab or modular construction? Um, and specifically, somebody was getting into the like idea of SIPs and as a favorable option in construction financing, given that semi-prefab nature. So, any thoughts that folks have or experience on working in sort of a modular manufactured prefab uh, context?
We even had one project that we designed as modular and had to go away from that in no small part due to financing. We're big fans of it. We're going to do more modular projects, but you do have to um, basically pay a lot more a lot sooner, and your sort of construction loan draw schedule is very different. And deposits, to get dates on the factory floor in some cases, et cetera, before you would normally even be in your timeline where you're closing your construction loan. So you got to close your construction loan earlier and have a funder that has basically the bottom line is find a lender that's done modular before because of you're not it is a lot of overhead to getting a lender there the first time. And so there's plenty of lenders and larger banks and other and now CDFIs and stuff that have done it now. So but that's the key thing. Find them and then they'll work with you on it because they have to be willing to lend larger chunks of money when there's not in some ways as much collateral on site yet, to get things going.
What do you have for us, Sam?
Oh, I thought we were giving more opportunity to answer. Yeah, so we have a few questions here, but I also want to be mindful. I see people have their hands up, but I'm going to pose one more question from the chat. Yeah, are there any state or city incentives, financial, to build ADUs under a state mandate?
I mean, it's different in every state.
Yeah, I was thinking, I'm reading that out.
More and more states have ADU laws, which is fantastic.
Yeah.
It's relatively common that those come with fewer fees than at a minimum. And in places like California, where building housing hasn't been by right, the ADUs are by right, like single family homes. So, so there tend to be, it's not incentives and like you get paid something, but it tends to be, a lot of times you can dovetail on the utility connection of the main house. So a lot of reasons that it's less expensive.
I want to encourage anybody. I know that there are hands raised, but if you could put questions in the chat, that would be great. And I'm just also curious. There have been some questions about like specific projects, and wondering if we could start for the next few minutes a little what we call a peer assist, and get a little some thinking on this. So somebody writes, how do you construct micro villages without on-site parking that are cooperatively held and even cooperatively developed? So an example here is the physical form of cul-de-sac in Tempe, Arizona, but with the tenure of a frolic project. So how might that be financed, permitted, and constructed? That's a multi-part. That's like a conference session question. But anything coming to mind from our speakers as I ask that question? So it's really not, it's small scale in terms of size. It's not small scale as we typically define it in terms of, 1 to anywhere from 8 to 12 units. But curious about anything there. Very creative question.
Well, Garland and I have been like chatting since he posted that about scheduling a brainstorm. I think that similarly, I was thinking that's like a bigger conversation, and thought about bringing in the people from Cul-de-sac and Opticos, like that project. But I think it is challenging in terms of just land availability. Like that project was built in Tempe because it was, there was a lot of land, and zoning and permitting is very different in Arizona than in the Bay, as everyone here knows, versus California.
Yeah.
But yeah.
Okay. So there's a couple more questions in here. Sam, do you want to go, and then we'll see if we can squeeze these in the next few minutes before we transition?
Yeah. I think a question that came up that I find also pretty compelling is, what about building with owners as an equity partner?
Well, I found that intriguing. I've explored that a few times, but it's so much about building relationships and having aligned expectations and visions. So if you can achieve that, that's great, although it just takes a lot of work to dial in that expectation. If I may, I saw a really good question by Devin from Sacramento that I wanted to speak to, because it gets to kind of the coaching idea, which I think is critical for
Yeah.
these types of conversations to sort of evolve into really nurturing people to become developers. And again, wearing the advocacy hat that I wear, it's really tough to find the right lender. It takes a lot of work to find the right lender to build a relationship. Again, a lot of personal alignment, and coming from, I don't know your background, Devin, but coming from a community of scarcity or poverty, that I came from, for example, when I went into development, I didn't have a lot of relationships and a lot of people I can reach out to get those relationships built. And it just took a lot of time. This is why if nonprofits can develop coaching situations and nurturing relationships between people trying to become developers and all the vast resources out there, I think that's a huge thing that's needed to enable people to become small developers.
Yeah,
Great.
thanks
Thanks,
for
Carlos.
uplifting that question, Carlos. I also thought it was really important.
Yeah. Josh, I see your hand, so I just want to go to you and then maybe to one last question for our time together today.
I just was going to respond to the land equity, working with owners as equity partners. That's almost the only way that we build our projects is working with landowners that we partner with, which makes it way more possible to get projects to pencil in markets where land is so expensive. Um, and I encourage it. Like I think there's a lot of opportunities that could happen with that, and a lot of landowners that we have in Seattle, we have 180 on our interest list of single family homeowners that want to build projects with us, and starting to get some in California as well. And I think that there's a lot of people like that's been pointed out that have really low interest mortgage rates and don't want to let go of their home, but also don't want to leave their neighborhood. And if they have a financial pathway to stay in their neighborhood and co-develop, there's actually a lot of people that are interested in that. So I think for a small scale development, it's a really interesting pathway to make small projects pencil.
Great. Thank you. All right. Sam, do you want to take us in? We could do another question, but I'm just wondering if you want to wrap us up now, because I think another question might take us over.
Oh yeah, sure.
Okay.
My
Well,
closing isn't
thanks.
that my
Yeah.
closing's not that long, but I think you might be right.
Okay. Thank you. Thank you again to everybody, not only speakers who showed up to share your expertise, but again, the idea of the small development incubator is that it's not just about getting information from folks who are sort of put up on the screen as experts or as experienced, but actually sharing information with each other. So Sam's gonna talk more about how we're moving this forward, but just wanted to thank everybody who came to share ideas, whether you were invited and were on the screen or whether you were in the chat and sharing great ideas or both. So thanks everyone. And Sam, I'll turn it over to you.
Yeah, awesome. Yeah, thanks again everyone for your participation both in the chat and like verbally. Sometimes the chat can be a tough place on Zoom, but I found it actually super educational and interesting, and I hope it continues to inform the future offerings that we hope to bring to y'all. So as I said in the beginning, over the course of the rest of 2025, Build It Green will be hosting a series of additional events that hope to connect small-scale developers with local government officials, suppliers, financiers, and just others that seem relevant to each session. So the aim of these events is to create conditions that promote that shared learning and spaciousness for not only building a toolkit that brings your projects to life, but I think we touched on this over and over again today, which I think is really a salient point that like how to build these relationships. And that's not always super clear, but I do think spaces like this and chatting like this and sharing information on the chat, hopefully we can build those beneficial partnerships over time together. So towards the end of the year, we are hoping to offer a more intensive boot camp for small scale developers in conjunction with our InkDev partners. So that's sort of a continuation of the lecture and the workshop. And please look out in the next few weeks for an announcement about our next event in July and then in September. Um, yeah, I'm just really grateful for this space and grateful for everyone who showed up today. Um, it might feel a little cheesy, but a Build a Green tradition is to ask everyone to come off mute and say goodbye together, just so it feels a little more human after many minutes of being on Zoom. So, um, yeah, I'm gonna encourage everyone to get off mute and just say bye, everybody, and thank you so much.
All so much.
Thank
Bye.
you.
Bye,
Bye.
Bye.
everyone.
Thanks so
Well
much.
Bye.
done.
Thank you.
Bye.
Let it
Thanks
green.
again. Thank you
Woo.
for everything.
Thanks.
Thanks, Greg.
Bye-bye.
Thank you. Bye.